Welcome back to another episode. Today, I want to take a closer look at my favorite semiconductor company. You guessed it, Nvidia. What I really want to do in today's episode is take a closer look at big risks that can happen in 2024. This is a company that has run up dramatically in the past year or so, thanks to obviously the AI market. So, in today's episode, I want to take a closer look at a few scenarios and what are the probabilities of them kind of occurring in 2024. Can these give us buying opportunities, or are we just going to be just continue to see green for this stock? I also want to take a closer look at some research that came out today that maybe some people might be fearful and just share my overall thoughts. I think it works perfectly with the scenarios I'm going to discuss.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So right now, what's happening is I'm seeing a lot of reports, and I even got a post on Twitter X by Jeff to kind of tell me a little bit about this Edgewater research report that came out today, or we started to see reports today. And just a quick summary of this report, it does seem like they see the first mixed data points for AI GPU. And this is obviously creating a nice amount of fear for the stock, as some investors might be wondering, hey, look, is the AI market going to dwindle down? So obviously this is kind of creating some uncertainties for the stock. They do mention that GPU shipments are still supply constrained in 2024. So overall, that's still bullish. And overall, there is no real conclusion on why there are mixed points, but they do expect reacceleration in mid 2024. So again, that pocket of weakness might be, or of uncertainty could be creating pocket of weaknesses. So like I mentioned, I want to take a closer look at scenarios. I believe I have 7 different scenarios in this overall market. And let's start off with scenario number 1. Scenario number 1 is AI demand completely slowing down. We end up figuring out sometime in 2024 that, hey, look, AI is not all caught up to be, and we're going to start to see a slowdown from cloud server providers and from other AI startups and other AI investments, which can obviously dwindle down revenue, especially if we take a closer look at revenue in the trailing 12 months. We can see Nvidia has kind of skyrocketed in revenue, and we can see the expectations for the next few years. So this is probably the biggest risk of how is the AI market going to be, and if it slows down, that's going to be a major risk for the stock. Like I mentioned, later on, I'm going to kind of discuss what I believe the probabilities of stuff like this happening are. But let me know in the comments, what are your thoughts on AI demand completely slowing down in 2024? Now, scenario number 2 is AI demand stays consistent for the next few years. And right now it's been consistently growing. One of the main reasons is we can see companies like AMD recently presented that they believe the AI accelerator market can grow at a 70% compounded annual growth rate from 45 billion here in 2023 to roughly $400 billion plus in 2027. So AI demand stays consistent for the next few years. Scenario number 3. Scenario number 3 is one that I believe a lot of investors should definitely keep a closer eye out. Cloud service providers have an over inventory issue, and we see pockets of weakness impacting the overall AI market. And this is the over inventory issue is something we see a lot in the semiconductor market. We usually hear it in the consumer side, but we definitely see it a lot in the data center side. One prime example is just most recently, data center has seen over inventory correction in the CPU market. We saw kind of a pressure on the total addressable market there, and obviously competitive pressure. So scenario 3 is cloud server providers and other of these big players having over inventory issues, and we kind of see a slowdown in the quarters ahead. I do believe if scenario 3 happens, it would be one that would create a lot of buying opportunities, as right now we're seeing kind of this huge euphoria, I think that's the correct word, of the AI market and how the AI can just continue to grow. So when we start to see pocket of weaknesses like this, we're going to see stock prices, in my opinion, drop down dramatically. And like I mentioned, clouds over inventory corrections are usually a short-term pain, which could create buying opportunities for AI companies and for semiconductor companies. That's normally the trend here. So scenario three is one that I would be open to seeing. Now, I'm going to talk about the other scenarios, but first, I do want to say thank you for the support. We just hit 29,000 subs. I'm trying to hit 30,000 by the end of the year. Let's see if we can do it. We have about 12, 13 days left, but let's see if we can do it. I also do have exclusive membership program. Click join to learn more with weekly exclusive videos and special offer at fool.com/Jose. So now scenario four, it has to deal with cloud server providers as well, but this time them optimizing orders while waiting for new products. So while they optimize and wait for these new products, we again see pocket of weaknesses. And we can see, I mean, for example, Nvidia, their king right now is the H100. We expect to see the H200 in the second quarter of 2024. And then in 2024, we also expect to see the Blackwell 100, which is the next generation. Those are, I believe we're going to see some huge leaps versus the H100. So some cloud server providers could be like, hey, look, we're not going to go too much in purchasing too much H100s right now. Maybe we might do a little bit of purchasing of the H200, but what we really want is the B100, as that's going to be the huge generational leap in performance. So we're going to see some weakness maybe in the first few quarters as the new solutions come out. Again, very similar to the over inventory in scenario three. I do believe these pocket of weaknesses is where it's going to see a lot of doomsday articles that, hey, look, it's game over for Nvidia and all these AI companies. But those are the times, in my opinion, when we're going to see some great buying opportunities if scenario four happens. Like I mentioned later on, I'm going to explain how I see these kind of industries or these scenarios playing out. Now, scenario number five is in-home chips reducing the need for AI chips from semiconductor companies like Nvidia. I mean, we have Microsoft more recently released the Maya 100, their AI accelerator. We also have the Cobalt 100, where they have their CPU. We've seen other big tech players also create their own AI chips. So one of the big risks is, hey, look, scenario where these big cloud server providers reduce their AI orders because they have optimized AI solutions for their needs. Now, scenario number six is AMD and Intel taking market share. We have Intel 3 with their Gaudi 2 that does do a lot of great performance comparison to the H100. Their next generation Intel 3 is arriving in 2024. Obviously, most recently, AMD just released their MI300, and this is one that's causing a lot of talks in the AI market, where we can see AMD definitely taking some market share in this space. Now, scenario number seven is new AI tech and workloads. And actually, this is not a risk, right? This is probably more of a bullish trend. New AI technology and workloads could appear, increasing the demand for AI workloads. And I do want to say OpenAI, ChatGPT, pretty much came out of nowhere and that demand skyrocketed. And that's pretty much just text large language models. What if once we get into an increase of multimodality into the consumer market, the amount of AI and just anything from there on can continue to grow. So scenario seven, while it is not a risk, is definitely a nice bullish idea of new AI tech and workloads appearing in the market, which can obviously increase AI workloads. I actually don't have scenario eight, but scenario eight, now that I'm thinking about it, is AI solutions being more optimized and maybe not needing as much computational power as we kind of talked about in the past. I'm actually just freeballing it, but that scenario eight, that's definitely possible, where AI workloads to some extent become less computational need as we become more optimized in certain workloads, obviously reducing the needs for AI chips. So here, for example, I mean, Copilot, Microsoft just was introduced to the consumer market a few weeks ago. And again, we're going to probably see other big players. We still haven't heard from Apple with their AI market. We haven't heard from any other kind of really big consumer player on how they're playing this AI front. So now, before we end, I just want to share my overall thoughts. So, scenario one, which was AI demand completely slowing down, I do want to say that's a very low probability. I do believe AI solutions is going to be the next thing here. So, I don't believe this is going to completely slow down ever. AI demand stays consistent for the next few years. I believe this is also low probability, just because scenario 3 and scenario 4 are the ones I believe are highly probable. And that's either having over inventory corrections in cloud server providers where we see pocket of weaknesses. And again, I do believe scenario 3 and scenario 4 are the ones that are going to provide buying opportunities in the future. Scenario 4 was cloud server providers optimize orders, waiting for new products. So we see pocket of weakness as well. So I do believe those two are highly probable for 2024, especially as we have Nvidia coming out with the H200 and the B100 in 2024, which I do believe is going to kind of push off some IT spending and saying, hey, look, maybe we should wait out a bit for this B100 to come out. Now, scenario 5 is in home chips reducing the need for AI chips from semiconductors. I personally believe this is very low probability. I don't think anyone is anywhere near, even Google with their TPU, which they've been doing for I believe, almost 8 years, is still nowhere near the power of H100 for complete AI workloads. Obviously, they're pretty good for certain AI workloads, but not for the complete. So I don't believe that will happen in 2024. Obviously, that's a risk for maybe some other time. Next, we have AMD and Intel taking market share. I do believe this is highly probable as well, but I do believe this market is growing such a rapid pace that Nvidia can grow their revenue dramatically even while losing market share, because this is a supply constraint issue. I didn't put scenario 7, which is new AI tech and workloads that could appear, increasing the demand for AI workloads. I don't believe this is highly probable, but it is plausible. I do believe this is probably like a 50-50. We could see some new technology happen, which can obviously increase AI workloads. Now, scenario 8, which I mentioned, is optimization of AI workloads, reducing the need of maybe certain computational powers. I would say that's plausible as well, and somewhere in between, right? So I hope you guys enjoyed today's episode. This is just my thought process of how I'm looking at Nvidia right now. I do believe there's the probability that we're going to see some buying opportunities in the future because of those kind of pocket of weaknesses. And don't worry, when those pocket of weaknesses come, you have to make sure to come back to this channel. I'm going to share my overall thoughts, but usually these pockets of weaknesses, like I mentioned, are short-lived. And that's when here in the semiconductor industry is when we see those buying opportunities. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.